small and mid-cap investments safe? That's the big question we're talking about today. Welcome to the show. I'm Tamanna Inamdar. One of India's most seasoned fund managers, ICICI Prudential CIO S Naren, at an event recently has issued a warning so blunt, it's almost unheard of in the investment world. His exact words, among many, we think it is a clear time to take out lock, stock and barrel from small and mid-caps. S Naren called the coming decade the most dangerous after 2007-8, and he categorically stated that unless you are planning to stay invested in the mid and small cap space for 20 years, take your money out, adding that the outlook for SIPs starting 2023 onwards is very bad unless they're 20-year SIPs. Now, this is particularly worrisome, considering the total share of inflows into small and mid-cap schemes was 40% in 2023 in mutual funds. Here's Naren's argument. He says that banks are taking minimal risk in terms of giving loans to mid and small caps, so these firms are coming to the market with QIPs and other offerings and raising money from the retail investor. And Naren says all the risk is being borne by investors like you. I don't think either investors or wealth managers have fully realized this yet. So now, fund managers rarely say stuff like this openly. Their job is to attract investors to put in money in their funds, not advise them to pull it out. And yet Naren isn't mincing his words. He says even SIPs are not foolproof as investments, stressing that their success depends on market conditions. Now, why are we talking about S Naren's comments today? Because, and not only because of, but since those comments, we have seen a steep correction in both small and mid-cap indices in the equity markets. Overall, of course, you have seen markets on a downward trend. 75 of 150 mid-caps have fallen over 20% from their highs. 22 of 150 mid-caps have plummeted over 30% from their highs. Small caps are in even deeper trouble. 121 of 250 small caps have fallen over 20% from their highs, and 51 of 250 small caps have erased more than 30% from their value. And if that wasn't enough, every single mid-cap and small-cap fund has given negative returns since September 2024, which is why the question we're asking today is, what do you do with your investments in this space? Before we get to our panel on it, let's listen in to some of S Naren's comments.
Small cap and mid cap is something which is absolutely absurd on the market cap side, but is the chances of a bad return in SIPs is also very, very high at this point of time. Today on momentum indicators also, both mid cap and small cap are broken completely and decisively at this point of time. Small cap and mid cap is something which is absolutely absurd on the market cap side. In 2013-14, it was very, very cheap. And from 2013-14, it has gone to extremely absurd level on market cap side. Okay, we said, are we looking at it wrongly? Because after all, India is growing. So mid cap, small cap will keep growing. Then we looked at median PE. We found that we looked at median PE as a model. When we looked at median PE as a model, we found that the median PE of mid-cap has touched 43 and the median PE of small cap has reached 43. Again absurd at this point of time compared to what it used to be. And then we looked at what is the entire PAT contribution versus the market cap on small mid. That again shows that small mid, the market cap contribution is much higher than the PAT contribution. Okay, so there were people who said, you are looking only at valuation, is momentum changing? So we started to look at mid-cap momentum over Nifty. Even on mid-cap momentum over Nifty, we have a situation where the momentum has started to weaken and it has cut its DMA. I'm not the expert on momentum, so I went to one of my colleagues who is a very good quality momentum person. He says that you are very early, but now the momentum is cut. So on momentum also now mid-cap is cut. And similarly on momentum also small cap has cut. These things have happened in the last one month or so, that today on momentum indicators also, both mid cap and small cap are broken completely and decisively at this point of time. So the chances of medium-term returns in SIPs are likely to be low. If you're going to do a 20-year SIP from 2025 to 2045, will it be low? Answer is no. But is the chances of a bad return in SIPs is also very, very high at this point of time. Particularly SIPs which have started after 2023 or so, I think the chances of them which have started from 2023, I think the outlook for those SIPs look pretty bad unless they are going to be 20-year SIPs. My own view. Clearly hybrid. I think hybrid schemes are absolutely attractive at this point of time, depending on how positive you are on the market. If you are very positive on the market, it would be equity and debt. If you are less positive, it would be multi-asset, particularly if you like gold. If you are slightly even less positive, it is multi-asset allocator and balanced advantage. If you are negative, it is equity savings. Clearly, that would be one area very clearly. On market capitalization, FIs have just sold so aggressively at this point of time that we are very, very clearly in favor of funds which invest in mega caps like minimum variance fund.
All right, to take this conversation forward, I'm joined today by Ashish Somaiya, CEO, White Oak Capital AMC, Mihir Vora, CIO of Trust Mutual Fund with us, in fact, in the Mumbai studios, Feroz Aziz, Deputy CEO, Anand Rathi Wealth also joining in. Welcome to all of you and thank you so much for speaking with us. Now, I know some of you or maybe all of you are not going to be wanting to comment on someone else's comment. So let me get that straight out of the way. This is not standing in judgment of whether what S Naren said was correct, not correct. This is a question right now in everyone's mind, and which is what we must address. So with that context, let me come to you first, Ashish Somaiya. Was it not refreshing in a way to hear someone speak completely unfiltered about information that doesn't get out there to the average investor?
Yes, certainly it is refreshing. One of the most respected voices in the industry, spelling aloud his thoughts. It is refreshing to hear a comment like that. But a couple of things I want to tell you. If you see small cap as a space, it is known for volatility. So let me just recount, some simple data to you. Few years back, say January 2018, small cap made a peak. And then, it was one way down till April 2020. And then October 2021, again, we made a new peak in small cap. And then it was one way down till March 2023. And then, recently we made a peak in 2024. So here I've given you 3 to 4 examples. And what I have seen in my own, 25 years in the industry, I've seen that in any given 5-year time frame, it's not unusual for small cap indices to show volatility and fall 30-40% and then eventually also make a new high, right? So that's the feature. It's not a bug. That is how it has always behaved. The second important thing is, at least me, for example, or my firm, we actually don't even have a small cap fund, right? But let me just clarify to you, none of us advocates investing in small cap with the assumption top down that small cap will outperform large cap. But yes, our portfolios do have small cap investment for a simple reason that it's the most heterogeneous space in the market. If you look at large cap, you have HPBP IOC, you have TCS Infosys, you have the big banks, you have energy, you have oil, you have utilities.
IT, too much of banking, too much of IT.
It's all, so what I'm saying is it's all macro policy driven. It's all homogeneous. I can't generate alpha just by buying all of that. We need small caps because that's the heterogeneous space. That's where the rising sectors are, and that's where we generate alpha. So that is our case, right? And I think, small cap exposure is needed to generate alpha. That's where I will leave it. And it's known to be a volatile space. I mean, there's nothing new which is happening right now.
No, but what is new is the comments. What is the new? What is new is the comments, and what is new is the way the market has reacted. Yes, small caps are riskier. Yes, small caps generate alpha. For those of you wondering, what do we mean? If you want super normative or really, robust returns, you look at small caps. And if you compare what small cap funds have been given versus large cap funds in the last 2-year bucket, you will see why there's so much of inflow going into small cap funds versus large cap funds, or small and mid versus large caps. Mihir, in fact, the flavor of 2024 was thematic funds. So that's what the mutual fund industry does. It sees where the money is coming and you have products accordingly. But what we're hearing from S Naren, a warning bell, because he's saying that there are a lot of fund managers who have not seen a bearish market for a while. They don't know how to deal with it. The people handling the money day to day are also not aware of what to do when the tide turns, and the tide seems to be turning.
Sure. So first of all, I don't know how to slice and dice this, but the point is that fund managers may or may not have the experience, but fund houses do, right? And mutual funds are such a well-regulated product, such a transparent product, that you are just trying to generate alpha versus the benchmark. So you can't be too far away. Of course, you can be if you take larger than life bets. But given the way that processes, systems, and SEBI has been tightening the mutual fund industry, there is not a chance that you can be completely below the benchmark for a prolonged period of time. So ultimately, it's a question of asset allocation, right? What returns the particular asset class will give, whether it's equity versus fixed income, or within equities, large, mid, small, thematic, etc. So, let's get the debate out of the way that fund managers can mess it up completely by not taking a call, because the asset allocation call is done by the investor or the distributor or the advisor.
No. So what is the debate? So you're saying it's not the fund manager's fault?
No.
Or responsibility?
The fund manager's job is to invest as per the mandate, right? So if he's getting money in a large cap fund, he obviously has to have 65% in a large cap mandate, right? If it's getting money in a small cap fund, he has to put money in a small cap fund. The point is, the advisor or the investor has to take the call, and of course you can check with the fund manager what the preferences are. That's a different debate altogether. But as an asset class, you need to invest in the relevant category. I think that's where the debate is. Now, if somebody is giving his view, that's a call that one needs to take. But as an investor, ultimately it's your call or your advisor's call.
Okay, maybe that's a careful answer. I appreciate how careful you are with this answer, but I'm going to ask you straight up. If I put in a small cap fund in 2023, do I have to wait 20 years for positive returns? That's what one of a very respected voice in the industry is saying. Frankly, that's the fear on the street right now, and I think we should address it heads up.
Sure. I mean, I don't want to comment on the comments as you mentioned in the beginning, but if you were to go by history of the Indian markets, whether it's the large cap index or the small cap index, 10-year rolling returns for most of the indices have never been 2 less or never been 0, right? The point is, if you hold for a period of which is 10 years or more, then the probability of losing money is really less. And that's what the statistics tell you. Now, you can slice and dice it either way. I talked about rolling returns, which is a point-to-point lump sum investment. The returns for SIPs are even better. So if you look at a 10-year SIP for a large cap fund or a mid cap fund or a small cap fund, it is pretty healthy if you hold on for 10 years. The characteristic of the market is that, typically, and right now we are in a state of concern because the markets have corrected and the small cap indices have corrected. But that's the nature of the market, right? Typically, what you see is that the upswing are steady and the falls are sharper, right? So if you are going to invest over a period of time, right, bear the fall and let the market rise again in its natural course, then the probability of losing money in a systematic investment plan is very, very less, I would say. That's the nature of the plan. And that's the reason why the whole industry has been advocating SIP Karo, mutual funds, SIP Karo, because statistics proves it.
Okay. One of the comments made, and I keep peppering with this, is maybe look at stopping your SIPs in small and mid cap. I mean, here is, I think, where the alarm bell really comes in. Firoz Aziz, I want you to come in on the ongoing debate, and of course, I'll ask your view on what you're telling investors and what they think, but I'm getting that quote specifically. Investors should reassess if they wish to continue their SIPs in small and mid-cap schemes. Right now, I think maybe what fear we are seeing in the market is that the bulwark of this market, the main support has come from investors who diligently, eyes shut, have been putting money in SIPs month after month after month, believing that this is the path. Their faith is getting shaken now. Let me be very honest, that faith is getting shaken now. They need to be reassured, or they need to be told what is going on. Feroz Aziz.
Yes, Tamanna, see, Naren Saab is of course a very, very respected name. And when he says it, we stand up and listen. But we have to also listen to some data, which is there. So I personally think there's no retail investors should always invest in 3-4 schemes, right? He's not going to buy a small cap fund only. I would say that if you have the third scheme as the small cap scheme, you have to not be worried at all. And if in a decade, if a small cap fund does not make positive return, we have a larger problem to solve as a country. Because small cap is, the word small cap itself, I debate the word small cap. The 250 companies, there are 2,307 NSE traded companies, out of which top 500 mein large, mid, small khatam ho jata hai. So the other 1,800 stocks don't even have a space in the mutual funds definition. Can you believe it? And we still call them small cap, and the small cap is a 50,000 crore market cap. When an investor is thinking small, he's not thinking of 50,000 crore market cap. When he's thinking mid cap, he's not thinking about a 1.5 lakh crore market cap. About six years back, the largest small cap was 8,300 crores. Today it is 45,000 crores. So the word still is small cap. How can you still
So I'll just add that the person who's investing is not even thinking about market cap. They're thinking about returns. Let's be very clear. This is stuff we talk about. They are going to their advisor and they're saying, "Paisa kahan lagao? Are small cap chal raha hai, usme lagao." Let's be very honest what's going on.
Yes, Tamanna, sure. Let's see. Of course, people buy past performance. That's very evident. You ask any fund manager, he says that "Meri last month ki performance achhi hai, then I'll get more money." That's for sure. Tamanna, you've hit the nail on the head. India buys past performance. There's no two ways about it. The point I'm trying to get to is there is 93% chance. I'm speaking about rolling return on NSE small cap 250. There is 93% chance that it would be positive return on a 5-year rolling. Forget 10-year rolling. 10-year rolling is 99.3% positive return. Of course, now Naren sir is saying we are in that 0.7% possibility. Could just be, but I personally think investing is about higher probabilities, not lower probabilities. There is 89% chance for a 5-year rolling, and I'm speaking about monthly rolling for eternity, practically the full life of the index. 89% probability that you have beaten 5% per annum return. There is 81% chance that you made 10% per annum return and more. So the point I'm trying to get to is the odds are still stacked up in the favor of investor, even if he buys now. Second, I completely disagree to call them small caps as one group. MSCI index, India small cap index has 465 stocks. Indian mutual fund guys have only 250 stocks in the small cap index. So a foreigner sitting somewhere has 212 more stocks in the small cap index than the Indian guy. So why are we not expanding our universe of small cap? And how can we actually categorize 250 stocks in different industries, different segments, different sizes into one English word? So that's where I think the fund manager comes into picture. He's not buying 250 stocks.
Investors right now are wondering, should they reallocate to large cap funds? Should they reallocate out of small and mid cap funds? If they are mutual fund investors, direct equity investors are wondering whether they should reallocate their portfolios. What is your thought? Are you reallocating towards large cap?
See, that's our job in any case, and we have one flexi cap fund and one small cap fund. The point is that we are very much bottom up and we don't really do a top down call on whether to put money in large cap, mid cap or small cap. We just pick the best stocks available on the GARV framework that we have and terminal value investing framework that we have at that point in time. So if we find 50 stocks, out of which say 30% are in the small cap, we are fine with that. If we don't find 30% small caps, if it's only 15% small cap, we are fine with that too, right? So ours is a very bottom-up driven approach. But coming back to your point on allocation, the fact that you are talking about investors means that they have already planned something out for their portfolio, assuming that they have either their own call in place or the advisor's call in place. And the point of asset allocation is exactly that, to ride out the volatility. You cannot let volatility dictate your asset allocation. Your asset allocation has to start from the ground up, from a zero-based budgeting, as you would call it, depending on your life cycle, life stage, your social ambitions, your personal ambitions, and the goals that you have, which you would have planned out before investing. If you are going to chase the latest fancy fad or the latest, asset class which is doing well, you cannot change it.
I will just differentiate. I get your point completely. Yeah. But in this case, why are we talking about this? This is not about the latest fad or asset class. I could say 2024 was thematic funds was the fad or the asset class. Or not the asset class, but
I'm saying why are we debating? Why are we debating?
Because you have a very seasoned guy.
I'm asking you, why are we even debating a change in asset allocation just because small caps have turned volatile? That's the nature of the beast. As Ashish said, it's not a bug, it's a feature.
Yeah, but have they turned volatile because it is nature of the beast, or is there some inherent concern which has caused someone whose opinion is very, very valued to come and say this? I would say that's the only distinction.
Absolutely. So, see, people are entitled to their views. There is no harm in giving your views because, we are professionals and that's how the market works, right? Somebody is positive, somebody is negative, right? The point is that stocks are cyclical in nature. Small caps even more so. That's why we always say that small caps are more volatile, and that's the nature of the beast. You can't help it. Let's face it, there has been some earnings cut in the last 3 or 4 months in the small cap indices. Markets have reacted. The earnings cut has been about 10%. Small cap index is down 70%, 17%. Point is, let's debate why those earnings cut happened. Let's debate those fundamentals. Why is the market down 70%, 17%? Why is the small cap index down 17%? And why have the earnings cut happened? If we dwell into it, then we can take a view on the future, whether this is recurring, whether this is likely to stay low, or is there a case for upgrade of earnings going forward? That's the debate we should be having, frankly speaking.
No, fair enough. Just one last point, Feroz, very quickly. Astute investors often say when the markets are hitting their bottoms is the time to come and buy. Is that time right now? Completely contrarian view. You have one view saying, lock, stock and barrel, get out. My question to you is, would you say it's time to come in right now? Even if you don't have 20 years to wait, let me put that caveat in place. Say 20, 30, 40 years, I don't think people have that kind of patience.
I would say definitely buy and buy. Okay, it might sound like an equity guy being biased towards equity. I look at about 4 short-term barometers. All of them say that the markets are light. Markets can correct 10%. That's my disclaimer. I wouldn't be surprised if a small cap investor from here on, you can mark my words, in 5 years at least get a compounded return of 12 to 15%. And waiting for 10 years to come into positive zone is something I would not buy. If I buy a smart fund manager in my portfolio, model portfolio, which is what all our investors invest in, thousands of crores, Invesco small cap is there. That's beaten Nifty by 6% for this financial year as of yesterday. So I personally think buy and buy.
Buy. Okay. I'm glad we have this on record. We'll come back and we'll talk about it. We have this. Okay, Ashish, buy and buy.
Yeah, I mean, I would I already said it before you asked that I think that it's a time to start investing, start nibbling, and our trouble started with the US dollar and the Trump trade, right? What you're seeing now is just last couple of days, there is this, noise which has spread. I respect that, but I think that next 3 to 6 months, if you just stagger your entry, you will get some, good entry point. And I think I completely agree with what Feroz mentioned. And I'm not even a vested party because I don't run a small cap fund, but that's genuinely my view.
Last point. 3-word answer. Buy. No.
See, the small cap index earnings growth is 15 to 20%.
Yeah.
The large cap index growth is about 10%.
Yeah.
So you are seeing better earnings in small caps, and valuations have corrected. So it makes sense to buy.
Okay, so buy. Buy is the verdict from all 3 on our panel today. Of course, the caveat, you make your own decision, you speak to your own advisor, you do your own homework on this. But we wanted to break down this sort of alarming message which has gone out and put it into context for you. That's all the time we have on this episode of The Big Question. But thank you so much to all of you for joining us. Thank you to our viewers. And we'll see you back again, same time, same place tomorrow.